New York State Franchise Tax for S Corporations, a complex topic that can significantly impact your business finances. In this video, we'll break down everything you need to know about this important tax obligation. S corporations operating in New York State are subject to the franchise tax, a form of corporate income tax. While S corp benefit from pass-through taxation at the federal level, they must still navigate specific state-level requirements and tax obligations. The primary tax basis for S corp in New York is the fixed dollar minimum tax, or FDM. This tax is based on the corporation's New York State receipts. For example, if your S corp's receipts do not exceed $100,000, you'll pay $25. The tax increases with higher receipts, reaching $4,500 for receipts exceeding $25 million. Another important aspect is the entire net income tax rate, or E&I. This rate varies depending on the corporation's federal taxable income. Generally, S corp with federal taxable income of $290,000 or less face a tax rate of 6.5%. For those exceeding this threshold, the rate increases incrementally. S corporations in New York must adhere to strict compliance requirements. Unlike the federal S corp election, New York requires a separate state election form. This form, known as CT6, must be filed within 75 days of the beginning of the tax year. Failing to file this form on time could result in your business being taxed as a traditional C corporation. Shareholders of S corporations, including non-residents, are taxed on their pro rata share of the company's income. However, non-resident shareholders are only taxed on income derived from New York sources. This determination is made at the corporate level, ensuring fair taxation based on the business's activities within the state. There are additional considerations for S corp operating in New York. While S corporations are generally exempt from the Metropolitan Transportation Business Tax surcharge, they may be eligible for various tax credits. These include the Investment Tax Credit for manufacturing equipment, the Excelsior Jobs Program, tax credit for expanding employment, and the Real Property Tax Credit for small businesses owning or renting property in the state. Understanding and complying with New York State's franchise tax requirements is crucial for S corporations. It ensures proper tax payments, avoids penalties, and allows businesses to take advantage of available benefits and credits. Remember, tax laws can be complex and subject to change, so it's always advisable to consult with a tax professional for guidance specific to your business situation.